Hey, can you hear me? Raise your hand if you can hear me. Just let our moderator know if you can hear me. Are you able to hear me?
Can you hear him clearly?
Did it say off when you click?
Testing, testing.
I think it said off.
Let's see.
Yeah, I think it's on now because it's green. Yeah, I think we're figured. All right, awesome. Okay, so let me start over. We're only 2 minutes into this thing, so it's okay. It's okay. It's technical difficulties, and we are not professional videographers or any of that, social media folks. We are really here to serve the community. Okay, so let's start again. My name's Theresa Barron. I am with Take a Look Real Estate Brokers. I'm the broker and the owner. I've been selling real estate for 25 years. So I got some information. I got some breadth and depth in terms of, just doing this thing for the last 25 years. I've helped families from all walks of life, all income levels, all neighborhoods. It just, you name it, I probably have sold something like it. My goal right now is to show people how you can get into owning your own home with $500 down. Now, most of you have heard about FHA. Most of you have heard about conventional financing, which might require you up to 20%, as low as maybe 3% down. The program that we're talking about will get you into your home for $500, and we mean $500. It is a conventional loan. If you know anything about private mortgage insurance, it does not have private mortgage insurance. Is that right, Robert?
That is correct.
Okay. Robert is actually the expert on this product. It's a product that his bank offers. His bank is First Federal Bank, located here in Columbus and in other parts of the state of Ohio. And this program provides you with an opportunity. Let me turn this camera around a little bit so you can get in.
Maybe I'll scoot over.
Yeah, it provides you with the opportunity to buy your property with $500 down. Now, if you're talking about renting, let's just do a comparison quickly. Just a quick comparison. Let's say you want to rent something and the payment is $900 per month for rent, which is almost challenging in Columbus right now to rent something for $800 or $900 a month in a decent neighborhood. But if you did want to do that, you would have to come up with your first month's rent plus your deposit plus your application fee, and you're probably not going to get out of there for less than about $2,000 to get into a new rental property. What we're saying is that wouldn't it be really nice if you knew that you didn't have to have a 700 credit score? What's the credit score?
620.
See, 620. We can take somebody from 500 to 620 pretty quickly. Within a let's just say 3 to 6 month period, we can get those scores up to around 620. 620 credit score, conventional loan. There are some income restrictions with this product. The income restrictions are that a family of 3 cannot exceed $63,000. And if you have 5 people, we don't add more money. It's just that is the maximum cap, right? That's the cap, 63,000. Yeah, go ahead.
I was going to say the good thing about the income restriction program also is though this product is specialized for community development. So even if you are over income and the house that you want to purchase is in what is considered a low to moderate income census tract, those income restrictions go away. So you can make as much money as you want, as long as you're purchasing the house that's in a low to moderate income census tract.
Right.
Because the idea behind the program is to stimulate affordable housing and housing that's going to be consistent. So we're trying to help the low to moderate income neighborhoods raise up their home buyer percentage, and we're using the flexibility of the program to do that in those census tract areas.
Yep, absolutely. So what we're saying is the income restrictions are mainly for the suburban, more affluent neighborhoods. If you're staying in the city of Columbus, we just checked one yesterday, for instance, the 43227 zip code is a moderate income zone, and guess what? You don't have any income restrictions.
Correct.
You can get into that neighborhood with $500 down, and it doesn't matter if your family makes $200,000.
Correct.
Now let's talk about a couple of the other restrictions.
Sure.
How about the fact that you can only own one home? You cannot be a current homeowner, even though it is not for first-time home buyers only. You can't buy, have a rental property or keep a property as a rental property and then turn around and use this program.
Now that is correct. So you cannot own multiple properties, but you can use the program. For instance, if you're living in a house and you're selling that to buy this house with the community mortgage program, then you can use the program. You just cannot own multiple properties simultaneously.
So this is not for investors.
Exactly.
This is really to get more people into the idea of home ownership and to make it affordable, make it easy to get to, make it just, approachable, so that you're not feeling like you've got to meet some standards that a lot of people just are not going to meet, because life happens, right? Life happens. The additional thing I want to tell you is that it's streamlined. It's not a difficult process. I was talking to Robert the other day, and he was letting me know that he could actually have this thing pretty much approved if you got all your documentation within 24 to 48 hours. So then it's just going through the process.
That is correct.
Yep.
So if we can get a full application at the time of application, and you have all your standard stuff that any lender is going to ask for, W-2s, pay stubs, bank statements. If we can get, the more information we can get starting, the quicker we can finish.
Right.
So our process is, if we have all the information, is generally standard 30 days to close, as long as everyone is working together and we have our information in a timely fashion.
Right. And we know that this audience, the audience with Take a Look Real Estate Brokers, can be national. So you might want to look, if you're not in Columbus, Ohio, or in Ohio, period, and you're in a different city, you may want to actually take a look at your community banks to see if they have a similar program, because in most cities, these affordable programs do exist. This is not what we're not talking about OFA, and we're not talking about necessarily the City of Columbus down payment program or Whitehall. We are talking about a bank that has a pocket of funds that they can lend out for specifically community reinvestment. So it gets our folks into homes for $500. That's a deal, right? It's a deal. And it makes it very, very affordable, and it makes it very attractive for folks who might think that it's just impossible, think that it's very, very difficult. So are there any questions out there, Aaron, that we need to answer? Because we're going to cover some more details on this program, and maybe talk about how we can combine other programs. I think that would be good for people to understand.
Yeah, if there's not any questions, we can talk a little bit about what everyone generally thinks of first when they're going out to get a loan or a mortgage, and they want to talk about credit and down payment. So I can take a few minutes to talk about that. As I mentioned, go ahead.
At this moment, I don't see any questions right now in the chat. Darnell, if you have a question, feel free to include that question as well. But go ahead and go into the next part of the discussion. And then if there's any other questions further, we can handle those at the end of the webinar. And then we can also share with them how they can join tomorrow's live event as well.
Right, absolutely. Yeah, y'all see the link below. I want you to click on the link below, just as a plug really quickly. If you want more details and you want to actually get pre-approved and you want to find out where you are, or you want to have a more in-depth discussion, I want you to click on the link and register for tomorrow's live event. It will be off of Facebook. Yeah, and definitely be yes, absolutely. So do you want to go talk about some additional things about this program?
Sure. As a lender, most of the immediate questions that I get concern credit and down payment and those things. So I did want to take a few minutes to go into a little bit more detail on that. As we mentioned earlier, the minimum credit score for this program is 620. So that is kind of a hard and fast credit score because of the flexibility of the program already. But another really unique or neat thing about the program is, if you don't have any credit score at all, you can still potentially qualify for this loan. So we will accept alternative forms of credit to establish your credit or payment history in the past. The most important one that we do have to have, though, is verification of rent, or VOR. So your past rental history would be one of the most important things that underwriters would look at to determine the credit worthiness if you don't have any other forms or lines of credit. So that was something very important that I wanted everyone to know about, because a lot of people hear, oh, I don't have any credit, I don't have a 620 score, I can't do anything.
It's okay.
That's not the case.
It's okay to not have credit. It's right. Okay. You have cell phone bills, you have insurance payments. This program, utility bills, it accepts alternative alternative forms of credit, and we can build essentially a credit report, if you will, showing these alternative forms, and they're acceptable. So not everybody wants to work in the credit system, and I think that's sometimes that's a blessing, sometimes that's a curse. In this case, if you pay your general bills on time, they're going to get a history on those bills, and so you might as well start right now, so they can get that history started, and we can use those alternative credit sources.
Exactly. Now, another thing I wanted to take a few more moments to talk about is everyone's worrying about what's coming out of their pocket. And as you can hear, Theresa, she's really excited about this only $500 down, which is great. So I wanted to go into a little more detail because I know a lot of people are like, really, $500 down? What is that? Okay, what else? There's always the what if, or the hook, what's the catch?
Right.
So I did want to go into a little bit more about what the $500 entails. And believe it or not, there really is no catch. It can be just as little as $500 down to purchase the property. When you do that, the $500 can even be used as your earnest money deposit with your realtor. So if your realtor has collected money for their earnest money deposit when you go into contract, those funds can then be used as part of the $500 down that you can apply for your down payment. We will not accept if you paid for your appraisal or you paid for your inspection, we cannot include that as a portion or the $500 down. So it would have to be the earnest money deposit or $500 that you have saved. Another great thing about our program is you can use down payment assistance.
Wow, so, that's a big one.
If you're in the city of Columbus, the most prominent down payment assistance program is ADDIE, which you get through the city. There's also a program through Ohio Housing Financing Agency, which is called OFA, which you can use for down payment assistance. So, for example, say you're in a situation where you can't get your seller to pay all your closing costs, but you qualify for down payment assistance program. That can be stacked on with this program. That is allowable. So that's not something that always is available to buyers or borrowers when they're using these type of programs.
Right.
So just very important information when you're trying to piece together your funds or what you can do or what you can't do. You can still use down payment assistance with our program. You can use your earnest money as your $500 down deposit, but we cannot accept whatever you pay for your inspection or your appraisal as going towards your $500 down. On top of that, as you probably heard me mention, I did mention briefly seller concessions, or if the buyers or if the seller's paying some of your closing costs, we will accept up to 6% seller concessions for all your real estate agents out there. So that's where you kind of start piecing things together and say, okay, if I have seller concessions and I can get down payment assistance, I really can come to the table with just $500. So it is a very doable program. It happens all the time, and it's just a very flexible program that we're using to try to grow the community development side and CRA lending in this area for us as a bank.
$500. That's what it takes. It takes $500, and the other expenses. I'm going to just talk a little bit about the other expenses that come along. These are sort of cover your behind expenses. We have to do, once you get into a purchase contract, we need you to go get an inspection on the property. We need you to have the inspection.
You want to have an inspection.
Yeah, you want to spend that money. So you want to be prepared. You need to have a little bit of your own cash reserves. I'd say somewhere around $1,000 total cash reserves to get you through the process. Because these expenses don't have anything to do with the loan. These are just kind of covering your behind as it relates to the property. We want to make sure that the property itself is worthy and that there are no latent defects that we don't know about. So that inspection process is critical. That's how we determine it's maybe $275 to $350 well spent, because you're going to know everything that there is to know about that property that the inspector can discover within a 3 to 4 hour period.
Yeah, I would say that that's a pretty good range for inspections. I've seen them as low as 200. I've seen them as high as 500 in all my time in the real estate business. Just something to think about. You might want to get that $200 appraisal, but sometimes you get what you pay for.
Yep.
So you want to make sure that you're vetting your inspector very, very well. You make sure that they're know what they're doing and things of that nature. The key for the inspection is, that's going to be the major piece that you look at to make sure that you want to move forward with purchasing the house.
Yeah.
If there's something on there that's going to be an exorbitant cost for you after you purchase a house, or it's like, hey, this house needs a new roof or whatever, am I going to be able to do that? Or I'm even going to be able to get through lending, once they do the appraisal or what have you. So the inspection is very important for you to determine that the house that you picked is the right house for you and it fits into your budget wise. There's no surprises. There's a lot of things on the inspection that the inspector is going to see that someone who doesn't deal with houses all the time is not going to pick up. You have structural issues. You have your mechanical issues. The furnace might look great on the outside, but do you know what you're looking at when you take that cover off on your furnace or your hot water tank? Yeah, the hot water tank might look great, but your inspector tells you it's 26 years old. Most hot water tanks last 10 years at the most, 10 to 15 years. So are you going to flip a coin on how long that's going to last? Because it's probably going to go out the day after you move in, because that's how things work.
Well, so, I'm going to be a little bit more optimistic.
Right.
Robert is playing devil's advocate.
I'm just playing devil's advocate.
I'm playing optimism.
Right.
I'm playing optimism because I'm going to tell you something. I bought my first house when I was 22 years old. Yes, there you go. I bought my first house when I was 22 years old. When I was 22. And I didn't have 2 nickels to rub together. Right. I mean, and I had 3 little kids. And so that I still own that house today. And I can promise you over the years, I have not put an exorbitant amount of money in my home. It was a basic, very simple property, but it's just doing that due diligence. Yeah. You just want to make sure that we're getting exactly what they say we're getting. And that inspector, that's his job to find that out. The realtor's not the inspector.
Exactly.
The lender's not the inspector. The appraiser's not the inspector. The inspector is the inspector. So that's a little bit of extra money, somewhere between $275 and $300, but it's money well spent. I've had clients that have told me that, they really don't want to spend the money on an inspection just because, they just don't want to spend the money. And basically I have to make them sign something that says, that I told you to get an inspection. Now, on the other hand, there's a warranty.
Yeah, there's a warranty. But real quick, I wanted to mention something that maybe people do not know. And I think a lot of people, when they're going through the home buying process or purchase process, they have confusion between the inspection and the appraisal.
Yes.
A lot of people are like, oh, well, the appraisal came back fine. The appraisal isn't there to determine what's wrong or right with the house. The appraisal is there to determine the value of the home.
Right.
So they may sound the same, or they may even look the same when you have them side by side, but they're doing 2 totally different things.
Totally different purposes.
Right. You can't rely on the appraisal to determine the soundness of your home. That's what the inspection is for. So sorry to interrupt.
No,
because I had that question come up.
That's a good hopefully just that little distinction piece makes a big difference. But the good news is that if this $500, now let me ask you, so if they come up with the $500 down, are they going to have to pay a separate appraisal fee? Or can that come out of the closing?
That can be part of the 6% seller concession.
Okay, so they don't have to come up with it up front.
No, they do not.
This is a good thing, guys. This is a big distinction because in most lender situations, the lender wants the money up front.
Correct.
Okay, the appraisal money.
Right.
And that's usually around $400, and then they credit it back to you at the end of the deal. This bank is saying if you have 6% seller concessions, that your appraisal does not have to be paid for up front. That's a big deal because, that just saves you the cash from having to come out of pocket immediately. You eventually it'll get paid for, but it gets paid for on the back end instead of the front end. So it's just less cash out of pocket. And I promise you, every FHA lender I know will not do an appraisal until they have the cash up front. So on your appraisal, on your FHA products, are you requiring them to pay for their so it's a big difference. This product is given a lot of flexibility because even on his FHA products or standard lending products, they've got to come up with that appraisal money. People have to come up with it up front. And it makes a difference, between the inspection cost of $300, your down payment $500, your appraisal, let's just say it's $400. Is that your normal cost for appraisal?
Yep, $300 to $500.
$300 to $500. Okay.
On who the appraiser is.
So you get those 3 numbers together, and you're $1,100, $1,200, something like that. And again, if you don't have to come up with that money out of pocket, it just makes it that much more easier because there are some other things that we need to think about anytime we are moving, which is just the plain. It doesn't matter if you're buying or you're renting, you still got to move. And there's a cost involved in that. So we want to, stack these coins and put them in our back pocket somewhere so we have enough to do what we got to do and we're not struggling through the process. So anything else we need to talk about as far as this program is concerned?
Sure. I just like to touch on the things that are most important to everyone who's probably out there listening.
Okay.
And, you know, when I talk to individuals, the most things that they want to know about is, you know, credit and down payment.
Credit and down payment.
So I did want to take a few more minutes to talk about some of the credit things because, you know, as you know, you could have a 620 credit score, but there still might be some derogatory things on your credit or things that some lenders might say, okay, we're all right with, and others that they may not.
Right.
So I did want to take a few minutes to go over some of the big things credit-wise outside of or despite your 620 credit score that you may have to keep an eye on or take note of.
Okay.
So one of the things is, as we said earlier, you can have owned a home in the past, but you cannot have a foreclosure.
Oh.
So if you did have a foreclosure in the past, unfortunately, that will eliminate you from this program.
Okay.
Now, the good thing.
What about bankruptcies?
That's what I was going to go to next.
Okay.
Now, the good thing on bankruptcies is it's kind of a good and bad. We don't care if you had a bankruptcy in the past, but it does have to be at least 3 years in the past.
36 months on bankruptcy.
36 months.
A lot of people filed.
Yeah.
And so is that chapter 7 and 13 or just chapter?
I would have to double check on that. I believe it's both, but I need to check.
Okay. So now a note on that. Note to y'all. Chapter 7 on FHA is 24 months from the date of discharge. Chapter 13, you can actually purchase FHA. So don't think that if you have a Chapter 13 and you can purchase with the approval of the bankruptcy court with an FHA loan with a Chapter 13. You don't have to be out of the 13 in order to purchase FHA. But we're talking, I just wanted to throw that in there because we're talking about what will throw you off of the $500 program. But I want you to know there's an alternative if in fact you are in a 13 or you haven't gone 3 years outside of a Chapter 7. A lot of people have gone through this, so it's relevant, and we just want to make sure that we address it.
Right. Another thing I wanted to touch on credit, and I'm going to try to be brief on this because it's a lot of information and it can get a little confusing. So if you have additional questions, yeah, please feel free to give me a call back. So
you want to give me your number real quick?
Yeah, yes, it's 614-581-4414, and my email is rwilliams@first-fed.com.
So you can get some information.
Right. So I try to make this brief and as unconfusing as possible, even though it is a little confusing. So we talk about credit, we talk about score, and if anyone's seen a credit report, you know, you cover your eyes when you get down to the bottom where the collection piece is, or all that stuff that was supposed to be paid that didn't get paid and got reported to the collection bureau. So I just wanted to take a few minutes to talk about collections. Medical collections. If they're less than 12 months old, we just need a written explanation as to why those medical collections were there. If they're older than 12 months, we don't even care.
Oh,
right.
Well, there it is.
So judgments and any tax liens must be more than 12 months old, and they must be paid clear to close. So if that's the case, those do have to be paid, and they must be clear to close.
Question. Question. I'm gonna interject here. I'm going to play devil's advocate on this side.
Your turn.
Listen. What if? Let me just ask you, if this scenario. Let's say we got a judgment and we got some collection items, but we got enough money in the deal. Can they be paid at closing? Can they be on this closing statement?
It has to be prior to closing.
Prior to closing.
Yeah, so
okay.
It cannot be at closing. They all have to be cleared and zeroed out.
Y'all know what we mean when we say closing? Y'all know what we mean? Is it kind of obvious, or should we maybe get into a little bit of detail when it's, after everything is said and done, after we do the appraisal and the inspection and we have the purchase contract and all that's done? I kind of said that in a backwards order, but after all of those things are done, now we're going to the closing table. I got one going to the closing table on Friday, and we got another one going to the closing table on Monday. We've already gone through all the process. So when we say closing, that's where all the parties get together, meet, and they finalize the deal.
Mm-hmm.
So, yeah, now
that's where you get the keys. So at the end.
Yeah.
So now here's one that is very, very important. So if you have collections and they total less than $2,000, and they're older than 12 months old, and they're not housing related, they will be ignored. So you can have up to $2,000 in collections, as long as they're older than 12 months and they're not housing related. We won't even look at them as derogatory or counting against you in the approval process. So I did want to spend a couple minutes to talk about that. If you have questions on how we look at student loans, I would suggest you just give me a call, because that is very and if or but. There's a lot of scenarios, so I don't want to complicate it or confuse anyone. So
well, I got a question. A lot of people have the income-based repayment plan.
Right.
So how does that work?
So that's an and if or. So
okay.
I can get into it if you want me to. So
just briefly.
So on student loans, you asked the question on
income-based repayment. Y'all know what I'm talking about, where we're able to get the student loans down to income-based repayment. A lot of times that'll get your payment down to zero. They consider you in repayment, but because you can, kind of get through the whatever their matrix, you actually qualify for a zero repayment plan, and they just requalify you year after year after year. So what does that do? So
on income-based payment or interest-only payments, if those are the type of payments you are making, those are not eligible.
Woo!
Right. So for student loan payments, if you don't have a standard fixed payment that you can document, what we will do is take 1% of your unpaid balance and use that as what your student loan payment is.
And a lot of y'all, including myself, we just have, student loans are a big problem these days, because 1% is a whole lot of money for some of our student loans. That means if you have $50,000, $60,000, $70,000 worth of student loans, that means they're going to claim, and you're not making a regular monthly payment on those student loans, they're going to count. If it's $70,000, they're going to count $700 against your student loan, against your.
That would be 10%.
Is that no 700? 700. Yeah, on 70,000.
Okay.
Yep, 10% is 7,000. So it's $700 a month.
No, but we're just 1%.
1% is that's 700 of 70,000. Okay. Somebody do the math.
Yeah, somebody do the math.
Somebody do the math. That's 1%. Because of 100,000, 1% is 1,000. Yeah.
Right.
So of 70,000, 1% is 700.
Well, that would be, wouldn't it be 7,000? Would be
700.
So 10% of 70,000 would be 7,000.
Yeah. So anyway,
yeah.
You see what I'm saying? So it's $700 a month that they're going to claim against your income, which means that's like having two car payments, because if your car payment is $350, you got two. So you're going to have to carry those two car payments, the equivalent, if you got $70,000 with student loans, and you're not in normal repayment. So what I usually suggest is, normally the repayment program is much less than 1%. They're usually, the graduated repayment plan, you might be at $250 on $70,000. So I usually recommend that people go ahead and get into that regular payment temporarily, just to get you over the hump. We're probably getting into more depth than we really want to get into, but these are just ideas and things that are coming up as we're going through this conversation. And I hope that the information has been very valuable. We do not want to hold people. Is there anything else you want to share with folks on this $500 down program? Because a lot of people are educated with some of this stuff just by, the fact that things are online.
Sure.
But we're taking away the kind of the myths and the mystery, and trying to get you, some really just basic information, so that that you can get into the house $500, but here's the other part of the story, and these are the things you need to know to prepare.
The only thing that I did not talk about, which is very important that I need to touch on, is that if you do use this program, you are required to complete a home buyer education class.
Okay.
So that is very important. So
where do we get that?
So a lot of organizations or lenders, they require you to take an 8-hour HUD certified class, which I would even recommend is the best thing to do. You'll get the most information you can. But for our particular program, you can use any of those, but we also have an online homebuyer education program that you can complete online, and it's not all day.
How much is it?
It's free.
Well,
so, and most homebuyer education programs are free, or you can get reimbursed one way or another. But this allows you to use this online program, or you can go to, any organization that offers homebuyer education program, as long as they can produce your certificate. I would recommend that if you can go to an 8-hour class and get the HUD certified one, you're going to learn so much information. It's going to be very useful for you throughout your home buying process. Another quick thing on the homebuyer education class is generally that certificate is only accepted for a year. So make sure that you're doing that within a year's time that you're going to purchase the home, or they may make you take the class over. And I'm just saying that in general, that's how most banks are.
That is about how they are. Yeah. So guys, I hope the information has been of value to you. We do have a link below if you want more specific information. If you're watching the replay, that's fine too, because this will be replayed. We just wanted to get it to have a specific time that we got started with this conversation. The segment called Ask Theresa will be going on weekly. And I want to thank Robert for participating and showing up here. We're going to try to bring as many value resources, people who have values that kind of line up with our values in terms of being mission driven and making sure more people have access to home ownership. I'm going to try to bring them in front of you on a consistent basis so that you just get, you're more informed. And when you're ready to pull the trigger, you remember that, we're here to serve and here to meet your needs.
Theresa, can you think of any questions that maybe your buyers would have about a particular program like this that we haven't covered, or do you think we got everything?
I think we did a
lot of that's going to take place on tomorrow's webinar. If you wanted to go into a little bit more detail about tomorrow's event at 5:45 p.m.
Okay, so at 5:45 p.m., we know that there are people that really right now just don't have time to kind of interact. So what we wanted to do is we wanted to take it off of Facebook Live. This is really an introduction and just to give you some basic information about the program. If you are ready to get pre-approved, we are going to go through a webinar tomorrow to gather information to see where you are and to get you started. If you're ready. If you're not ready,
register for the link in the comments.
Absolutely. Aaron is kind of making sure I'm staying on task here, and that is, we want you to register on the link below so that we have a head count and we know who we're talking to, and then we can actually get back to you and give you what you need specifically. So,
and even if from the information that you're hearing now, in your head, well, I'm not ready to buy. Don't let that stop you. That's what we're here for, to help you go through the process and pick the right people and information you need to get so that you can get there. So if you're thinking, oh, my credit score is 580, I can't do this. Don't think that way. 40 points is not a lot for your credit. Contact Theresa, contact myself, and we'll walk you through the process and help you get the resources that you need to get you to the point where you can participate in a program like this or any other lending program that you feel would be most beneficial for yourself.
Right.
Can the both of you please repeat your contact information in terms of phone numbers, emails, and websites?
Absolutely. Go ahead.
Oh,
I'm going to let you give your information first. Sure. I'll finish it.
Yeah. Robert Williams. I'm a business community development CRA lender for First Federal Bank. My phone number is 614-581-4414. That is my cell phone number. I usually try to get back that same day. If I can't answer, feel free to text me. I can generally respond even quicker if you text me.
Yeah.
Email is rwilliams@first-fed.com.
Yep. And I'm Theresa Barron. You can find me at admin@takealookbrokers.com. That is my email address. You can also call me at 614. I'm going to give you my cell phone number, 614-778-8503. I am just one of several different agents that work with my brokerage. I'm actually the broker, but I have great agents. So if I'm not available, I have wonderful people, and I can pair you up with someone who will be a good fit for you and help you get through the process. I am also here for you. So I just, really excited about sharing this information and getting out to the community and having just the opportunity, this platform, which is so amazing because just a few years ago, we didn't have this. We couldn't reach directly into your homes and serve you in this manner. But that is our goal, is really to just serve and add value to our community. And when you think about real estate and you have questions or you need direction, please don't hesitate to text us, call us, email us, or reach out through our Facebook platforms, through our channels, and we would be just excited to serve.
One other quick thing too, also, we're talking about this particular loan product in Columbus and or Franklin County.
Yes.
So if you are interested, particularly in Ohio, about this program, please feel free to give me a call. The income restrictions or guidelines may vary from county to county. So say if you're in Toledo or something like that and you're interested in this program, give me a call. Then I can refer you to our lender in Toledo. We have multiple branches in Toledo or wherever it is in the state of Ohio. We can get you the right information on income guidelines, and then I can get you to the right person who can help you out with this program.
There it is. There it is. Enough said. Enough said. All right, guys. So click the link below and get registered. If you found value, please don't hesitate to share this information. Let people know we'll be here. I will be here every Wednesday on this Ask Theresa social media segment that we're going to be doing, at least for the foregoing future. We will definitely be here, and we'll try to provide value, and we'll try to provide interaction and answer questions, and really try to make sure that you get what you need. I thank you so much for joining us, and with that, I am going to say goodbye. Bye.
Bye.
All right, Aaron, I'm going to see how I can turn this off.
I'm just gonna X out of it, and if I don't hear y'all, then that means